Okay, so this video is about Fibonacci retracement, and it's basically for you if you want to use it to do to know where the market is likely to retrace before it starts moving to a particular direction. Now understand that sometimes when you are seeing a particular trend, you don't really know where the trend is moving or where it is likely going to retrace before it moves downwards. And you've probably heard of Fibonacci retracement before, but you just don't know exactly how to use it properly. I want to share with you how to do this, and what you're going to be getting from this video is to know exactly how to minimize the amount of risk you can take and maximize the amount of profit you can take. So we're going to look at different markets to see exactly how this works, but I'm not going to waste at your time at all. By doing this, I'm just going to go straight to the point and share with you guys every single thing I know about this strategy and how it's easy to trade. Now, this particular method is not going to give you a specific trading strategy, because that's not what we're here to cover in this video. It's simply going to teach you how to use Fibonacci retracement to minimize the amount of risk you take in the market while entering the market at the right place to be able to take profit at the maximum amount of place you can. Now, let's go ahead and see how this works. Okay, so let's say, for example, you want to trade 15 minutes time frame and the market is actually moving. Let's say the market is moving upwards by saying that we're having a higher highs and higher lows, something like that. Okay, so let's just go ahead and say we'll drop this and the market is just moving upwards, and then eventually something happens in the market just goes ahead and breaks this particular level of trend, which you can see right here. And then once this particular market has been broken, the next conclusion is obviously to assume that the trend have changed. Now this market is now on a downtrend. Now what you basically have to do is very simple, right? So just go ahead and pick out your Fibonacci retracement tool. Go ahead and plot it at the bottom right over here and drag it all the way up here. This is for down trends or for down trades or for short trades. Okay, now if you're doing for buys, you have to do the opposite, go from up to down. And now here is your point of interest by the time you have drawn this. Okay, so the point of interest is very, very simple. Now this particular yellow point right here is actually where you are more interested in. This particular yellow zone, this particular zone, they call it the interest zone. Now over here in this particular whole box of interest zone, you see over here, a lot of things can happen in this interest zone. Now market can go in there and play around and, you know, maybe break the zone or something like that and returns back. Now some people like to wait for this market to go up and, you know, probably comes over here, like break the yellow line back, giving a nice bearish identification. Now some people don't really care about that. Okay, so let's say you actually have already waited for this to happen, and then the market comes over here and gives you a bearish candle somewhere here. You put your stop loss over here and take profit way down here. Okay, now this clearly becomes a 2:1 risk to reward trade ratio if you see it properly right here. Now it's very, very simple. This particular point is very easy to hit. The market is easy to hit this point because there is liquidity at this particular point. And the reason why you enter your trade in the first place over here is because the market has already come over here and played around at that particular junction. Now after it's already done playing around at that junction, you go ahead and know that, okay, now this market is probably going to start going short, right? Because you're going to see the candle pattern that, like I said earlier on, this video is not to teach you different trading strategies, right? But you might have, let's say you already know your trading strategy and stuff like that, you'll be able to figure out exactly when your strategy have formed within this region. Now once it forms within this region, you can go ahead and take your short position and then boom, expect maximum profit from here. This is easy, 2:1 risk to reward ratio. This can hit within 10 minutes, or let's say, let's not be too over optimistic, right? Let's say this can hit within 1 hour. You'll be able to take your profit with this, and that's just that. Okay, so this is a very simple analogy on how to do your Fibonacci retracement. Now I understand that there could also be some issues sometimes when you're trading this Fibonacci retracement. For example, you can see that this is clearly what happened over here. We have a break at this junction, and I drew this Fibonacci retracement over here to up here. And if you look properly, right, this is the original drawing I had, and I did this intentionally actually. So this is the original drawing I had. You can see, like, the market actually came to that particular level, but something happened in this level. Okay, it came retraced and then you can see it seems as if it has broken over here, and at the same time it has also gone ahead to form another interest region at the top right here. You can see this particular place. This is liquidity region as well. Now you can also see this and be like, oh, this is just a small amount of liquidity region, it's okay. I understand you can do that as well, but I just want to let you know that you should be careful about this particular setup, right? Because by the time this market goes ahead and breaks that region, it becomes another higher high, meaning that the reverse of this particular setup, this whole Fibonacci retracement I drew, could be the case. But like I said, this is more of a smaller scale than it. So this particular one I drew can still be optimally usable based on when the market returns all the way back to this particular point, right? We should start expecting a sell at this particular range, right? It's very, very possible. But while you are doing that, do not write off this particular one that you are seeing over here, okay? Because there's still a chance that the market is gonna use that particular one instead of this particular one I'm using. So sometimes you can just go ahead and avoid this particular trade. You can just go ahead and clean out this Fibonacci retracement and just, you know, wait for the new setup. If the market goes ahead and breaks it at the top, let's say maybe the market went ahead and did something something like this. Let's say if the market just went ahead and probably broke it somewhere like this, right? Then this becomes your new Fibonacci retracement region, where you simply have to go ahead and pick out your Fibonacci retracement tool and go ahead and plot it just at the top where it did that, and at the bottom over here where it's currently at, okay? So hopefully if the market can find its way back to this yellow zone, as you can see on your screen, you can also go ahead and use that as a point of entry, right? Use this as a point of entry and hoping to go all the way high up to this region as profits, okay? So this is also something you should also bear in mind, right? So when you're taking the initial trade I drew with this Fibonacci retracement, just know that this is a very serious zone and you should be expecting anything to happen within this zone. So maybe when your trade comes over here and start trying to reverse, just close out and knowing fully well that you've already taken profit from that one, and that's that, okay? So this is also something you need to pay attention. Watch your market constantly and just make sure that you're currently trading the right trade. Sometimes this is not gonna work out perfectly well, and it's okay. Leave a trade, move to the next one. This is just 15 minutes time frame. I can always find trades every single time. You can do this in any market you want to do it in. You can do it in any trading pair you want to do it in. There are tons and tons of them out there. You can check out on. None of them, you are not limited at all to the amount of pairs you can do this particular stuff with and be able to make money from them. So this is a simple way to draw your Fibonacci retracement and make money from it. If you're a person who is actually interested in this, go ahead and give the video a thumbs up, and just know that you've already learned an easy way to use Fibonacci retracement to make money from the crypto or forex trading market. And don't forget to subscribe to the channel to get more updates. Take care and happy earning.